Hi guys, it's Stock Curry, and the CPI inflation data came out much higher than expected, yet the markets pretty much blew it off. We'll talk about why that is and what news is coming out Thursday, because Thursday's news could be even bigger than Wednesday's news. So let's get into it! Let's start with the CPI data that came out on Wednesday. Wednesday's CPI came in at 9.1%, which was once again the highest in 42 years. But what was so shocking is the fact that prices went up across the board. Yes, gasoline and food was the highest increaser, but prices across the board went up. Now, the reason it's so important to talk about the fact that prices across the board went up is because people expected this month's CPI to be high due to oil and gas and food, and it was. What was not expected was for everything else to go up, because it was widely assumed that as people spent more and more money on gas and food and everything else, they would have less money to spend on all of the other things in the economy, so those would actually continue to go down. Yet, that's not what we saw, and a lot of the reason for that is due to something called a PPI, or Producers Price Index. The Producers Price Index, or PPI, shows how much producers are paying for the goods and services that are produced in the United States. Now, as the PPI goes up, that eventually makes its way to the CPI. Because the more that producers spend on the raw materials, the higher their costs, which means the higher the price of the overall consumer goods. So whatever the PPI goes up by, that usually shows up in the CPI a few months down the road. And believe it or not, the PPI, Producer Price Index, is coming out on Thursday at 8:30 a.m. So we're really going to have to watch the PPI to get an idea of how CPI might be over the next few months. PPI is our best leading indicator for CPI. But what about those oil prices? After they went sky high in June, surely they've come back down a ton already here in July. And will they continue to drop? Or could they possibly rebound and continue going higher again? Well, Warren Buffett's Berkshire Hathaway is adding a huge position in Occidental Petroleum, essentially betting that oil prices are going to rebound and continue going higher. Now, there's a lot of reasons why oil might actually turn around and go higher again. One of those could be a really bad winter in Europe, which causes extremely high oil prices since they currently have a shortage due to the cutoff of oil from Russia. Another reason could be Russia cutting its supply chain in order to boost their economy. And another reason could simply be Russia actually cutting off oil sooner than expected in some sort of retaliation against Europe. These are all risks in the oil industry right now, and it's why Warren Buffett continues to add on to his Occidental Petroleum stake, betting that oil is actually going to turn around and keep going up again. And if that happens, we can expect the CPI inflation numbers to remain high for quite some time. Now, high inflation has a direct impact on how much the Fed raises interest rates. And keep in mind, the Fed has their next meeting in just 2 weeks. And prior to today's CPI numbers, there was a 98% chance the Fed was going to do a 75 basis point rate hike. And yet, if you look at this futures chart, you can see that the futures markets are now pricing in only a 20% chance of a 75 basis point rate hike and an 80% chance of a 100 basis point rate hike. And this fear of these much higher rate hikes has caused the 2-year yield to go higher than the 10-year Treasury yield, which is a leading indicator of a recession. And in fact, we might be in a recession because literally the day after the Fed wraps up their meeting, we get the official Q2 GDP numbers. And if it is negative, it will have us officially in a recession. Now, all of that said, recessions are incredible opportunities to invest in the stock market, and I'm going to talk about what we're going to do to take advantage of this a little bit later in this video. But first, I want to talk about what's going on with the Treasury yields and oil, because this really explains why the stock market brushed off the super high inflation on Wednesday. In fact, at one point on Wednesday, both the S&P and the NASDAQ were green. So why was that? Let's go take a look at oil prices and the 10-year Treasury to find out why. For the past 2 weeks, oil has been dropping in price, and when oil prices go down, this is going to cause the stock market, especially the NASDAQ, to go up. However, As you can see on this chart, oil is now rising again. And if oil continues to rise, we can expect the stock market, which pretty much brushed off the high CPI due to this much lower oil that you can see here on this chart, we can expect the stock market to turn around and just keep on going down. The same is true for the 10-year Treasury yield. As the 10-year Treasury has come down over the past few weeks, this has caused upward pressure on the stock market. But as inflation was high, we can now expect the Fed to raise interest rates even higher, which is, as you can see, causing the 10-year Treasury yield to go up once again. And as this goes up, it's going to put more downward pressure on the stock market. So overall, a rising dollar, a lowered 10-year Treasury yield, and lower oil prices have all caused significant upward pressure on the stock market. So much upward pressure, in fact, that the stock market actually turned green momentarily, even in the face of extremely much higher than expected CPI inflation data. However, on Thursday, that could turn around and we could keep going back down since oil prices are now rising again. The 10-year Treasury yield is rising again. And we have the PPI Producer Price Index coming out on Thursday. And we have something else coming out on Thursday, which is huge. Thursday is officially the kickoff of earnings season. And by far, the largest earnings report we are going to be looking at on Thursday is JP Morgan Chase. JP Morgan is America's largest bank, and Jamie Dimon, who's been the CEO of JP Morgan Chase forever, is going to be speaking as well during his earnings call. Now, this is going to be the best indicator we have of where the economy is actually going because Jamie Dimon has an excellent finger on where the economy goes. Pretty much whatever Jamie Dimon says usually happens. He's really good at picking the economy. So we are going to have to pay very close attention to what Jamie Dimon says in his earnings call Thursday morning to get an idea of where the economy is going. And pretty much whatever he says, it's going to move the markets up or down on Thursday and Friday. And now moving on to the cryptocurrency markets, another crypto lender, Celsius, filed for bankruptcy protection. This comes on the heels of Voyager Digital filing for bankruptcy protection. And what makes Voyager Digital and Celsius identical is that both of them froze customer accounts prior to filing for bankruptcy. Remember, when you invest in cryptocurrency, you do not actually own your cryptocurrency assets. You have to get your cryptocurrency off of these exchanges and into a hardware wallet if you want to protect your crypto. Because if you leave your crypto on an exchange, I don't care what exchange it is, there's always a risk that the exchange could go out of business. And if they do, your funds are not FDIC insured. That means they're not backed up by the federal government like they are on a stock brokerage exchange. If you have stocks and the stockbroker goes out of business, you're guaranteed to get your money back from the federal government. That is not the case with cryptocurrencies, making cryptocurrency investing significantly riskier. And that's why, in the face of all of these bankruptcies, we see cryptocurrency continuing to fall. So if you want to protect your cryptocurrency and hold on to it so that if your exchange goes bankrupt, you don't lose your cryptocurrency, then you got to get your cryptocurrency onto a hardware wallet. Now, the hardware wallet I personally use is something called Ledger. There's other ones out there. If you want to know more about Ledger and that hardware wallet, I've got a little write-up on it over on my resources page, and I'll put a link to the resources page down here in the video. There's not one in the description, but check right here in the video right below me, and I've got a link to the resources page. All right, I want to give you one more thing to talk about, and that is just, let's talk about the channel, why I started this channel, how I want to help you out in the future. So I started this channel to help you guys become financially free. I want you to get financially free so that you can do whatever you want, whenever you want. I want you to be able to spend your afternoon rolling around in the grass with your baby rather than sitting at work listening to your boss. I want you to have the freedom to spend all day at home or go on a boat trip or travel or do whatever it is that you want to do. So to help you out with that, I am starting a new millionaire challenge called the Millionaire Club Challenge. And if you want more details on that, go look at my video called Join the Millionaire Club. I want to let you know we're going to be starting that challenge in a few weeks, and we're going to be using Moomoo for that challenge. Now, the reason we're using Moomoo is because, first of all, Webull, we already have it used for the options trading challenge for the Millionaire Dollar Club Challenge on that. So Moomoo we're going to be using for long-term value investing because Moomoo has significantly better research tools for long-term investing than Webull does. And Moomoo also gives you up to 10 free stocks when you open an account and fund it using my link in the description below. Normally you get 5 free stocks, but if you use my link, you'll get 6 free stocks if you deposit $100 or more, and you'll get 10 free stocks if you deposit $2,000 or more. Now we are starting the Millionaire Club Challenge with $2,000. We're going to be depositing $200 every 2 weeks or $100 per week, whatever is easiest for you. And I'm going to be updating you on that challenge right here on YouTube. Every other week, I'm going to produce a special video on Saturdays where I'm going to give you an update on the Moomoo Millionaire Club Challenge. I'll tell you what stocks we're buying, and it's all going to be on YouTube. You don't have to join a VIP or anything like that. It's completely free because I want to help you become a millionaire in the stock market. And based upon my calculations, if we can come anywhere close to the returns that Warren Buffett generated in using his value investing strategy, we will all become millionaires within the next 10 to 15 years. So I'd love to have you join us. I have a link for Moomoo down in the description of this video. Click that link to get up to 10 free stocks when you sign up and fund your account with $100 or more. Alright, I hope you enjoyed this video and got a lot out of it. Don't forget to hit that like button and subscribe. And if you're on YouTube, click the bell icon and click all so that you can get notified when I release my next video. I hope you have a lot of success trading, and I will see you tomorrow.